Today I was talking to a client who had purchased a home a few years ago, and we were talking about possibly the dream of buying land and building their dream home. Now, the conversation kind of went south when she started talking about interest rates and how it was so unaffordable and she just wasn't gonna be able to get to that point or pay that much money towards mortgage at any point in her life. So her words exactly were, the dream is dead. That didn't sit well with me. Today I'm going to talk a little bit about my perspective on this conversation and why we need to step back from the interest rate headlines and look at this from a different perspective. So stay tuned. What's up, guys? Jeremy Kane, living in the Denver suburbs. This is a hot topic and I want to dive into it. We will definitely get to more Denver specific content here in the near future, but the market is kind of the hot topic right now, so we're gonna roll with it. Please like, comment, subscribe. Please share this with anybody who you have these conversations with, because I'm hopefully gonna give you a little bit of a different perspective, a little bit of hope, and let you know that now may not be the best time to buy a home, but if you're looking at it as a stepping stone, it could be the perfect time, and I'll tell you why. Okay, so first things first, obviously, if it bleeds, it leads. The headlines are out there. All kinds of chaos is going on. We've seen the headlines drop about, the lowest mortgage applications and the highest interest rate and the debt and all this stuff that's just meant to get you to click on it and kind of get in your mind, because the more clicks the media gets, the more advertising they can sell, and the more eyes come on those fear-mongering headlines. So we have to understand what's going on here and what that looks like. And so first things first, those headlines, absolutely, right? I'm not here to tell you it's the perfect market. Transactions are down, things are, moving, things aren't moving. People really have to have a reason to sell in order to put their house on the market, which is limiting inventory because of these low interest rates. But within this conversation today, she mentioned that, I'm not giving up my 2% interest rate, right? You're giving up your American dream, but you're not going to give up your 2% interest rate. And I get it, right? When you're looking at these payments coming up, $4,500, $5,000 for, something that's pretty basic standard home. And then looking at, well, my dream home is going to cost double that. And I'm definitely not going to pay a $10,000 mortgage. Well, here's the deal. We need to build up equity in order to get there. And your very opportunity might just be in building up equity. Because what those headlines aren't telling you is 65% of the people are waiting until the interest rates drop to get into the market. If 65% of people are waiting to get in the market till the interest rates drop, and we see a flood of buyers to the market, well, that's going to drive the prices up. So what I looked to, I said, okay, well, if we have a $700,000 house today, and it's at a 7% interest rate, your monthly payment will be around $4,500. If we see a $700,000 home increase in value $200,000 over whatever time period, but it's a 5% interest rate, which we probably won't see for quite some time, I will tell you. I think that once it hits below 6, we're going to see those people finally come to the market and flood in. So 5%, that mortgage payment is actually closer to $4,700, with a $900,000 house. And she's like, yeah, so that's where it'll be. I said, no, that's the same house. That's what you're not getting, is you're missing that opportunity to take advantage of that equity. And so that's where there is strategic moves that can be made in a market like this, because things are slower, because sellers are feeling a little bit more pinch than they have in the past. Maybe there's opportunity to get in, at a baseline price and take advantage of that equity gain. Now, here's the deal. It's also not the best time to buy for some people. However, if we're sitting on the sidelines and waiting and not doing anything to improve our status for when that time comes, when we feel personally as home buyers that it's time to get into the market, and then we start going back, right? For instance, credit scores. Recently 740, 750 was a great credit score. They just upped it to the top-notch credit, rating for interest rates and all the things is 760. So if you're sitting at a 725, you could do some work on your credit and get up to that 760 level and get that prime rate that we're all talking about, because that's what people don't really understand is perfect situation, perfect credit is this number that's thrown out there, whether it's 7 or 8 or, whatever percent they're talking about. But if you're not in that prime spot, you're going to have, points to pay on that or extra quarter point on the interest rate or whatever. And so you have to really make sure that you are doing everything you can. So let's have a conversation and let's be a little more strategic versus just saying, okay, I'm here, because you essentially are letting that interest rate that you're locked into, granted it's great, I know it's great, but it's inhibiting you from gaining wealth in the real estate world, right? It's inhibiting you from being a homeowner at a higher price point when we get that next surge of appreciation, which hopefully will allow us to balance out and stop this, Jekyll and Hyde, right? But interest rates, as they come down, the prices are going to go up naturally, especially in this gridlock market that we find ourselves in now, where people are being really careful about what they're doing. So it may not be the best time, but it may not be the worst time. It may not be, oh, I'm giving up a 2% interest rate for a 7% interest rate. Woe is me. I'm throwing more money away, and this is just how it is. Because let's not forget, you can always take advantage of the equity gain and then refinance. And I know I've said that a lot, but the point is, if you are thinking about this or you have a specific situation, that's where we need to talk. Book a call with me in the link below, and we can dive into your exact situation and make sure that we're doing the right thing. And I promise you, I'm not going to tell you it's a great time to buy if it's not a great time to buy. My relationship with you is much more important than getting that commission check this week or next week. I'd rather build a plan and be your trusted associate all the way along the way. And I'd also love to have dinner in your dream house with you one day, because I refuse to allow this interest rate, kind of narrative take away the American dream from my people. And so that's kind of the point. I hope that kind of makes sense. Okay, yeah, maybe we do step up, right? Maybe we get in at, go from the $500,000 to the $700,000 house now. Sure, it might cost a little bit more with the interest rates. When the interest rates drop, people come to the market, which I don't know if that's gonna happen next year, or the year after, or the year after, but it will happen, right? They're gonna come into the market, and then I'm gonna be a homeowner at a higher price point, at a higher basis. So if my home appreciates 10 or 15% in 1 year, like it probably will when that happens, then I'm basing that off of a $700,000 base price, not a $500,000 base price. And so I'm gaining that little bit more equity, getting there. And I'm here to tell you that no $2 million house will ever be, comparable to a small mortgage payment of a $500,000 house. It just doesn't make sense. But if we keep chipping away and keep gaining equity and keep taking advantage of these market jumps, it's absolutely possible to make it within your realm of possibility where it's worth it to be in the dream home and pay that mortgage. And so I hope that helped. I'm not a mortgage advisor. However, I do help people build wealth through real estate, and I know that staying stagnant in the market is going to leave a lot of people with that 2 to 3% interest rate. At some point, they're going to have to walk away from it, right? And if they walk away from it and they're having to jump up that much in price point for just a little bit lower interest rate than it is now, especially with the buy down options, they're going to be having an uncomfortable mortgage payment, which is the last thing I want. So I think the point is, let's sit down and talk about your unique situation. If you have any inkling, and I promise you, I will not force you to buy a home or, do it today or whatever. I'm going to lay out the facts, and then I'm going to be along your side, whatever you choose. The route is, let's make that happen. Let's get you to where you want to get to using real estate as a vehicle to building wealth, which is absolutely a gift in which we are given with the tax breaks and all the things. So let's make that happen. Please like, comment, subscribe, share this with anyone who can utilize this information. I'm not going to lie to you. Rates are high, prices are high, and I don't think that either coming crashing down anytime soon. So let's make some strategic plays and let's partner together to get to where you want to get to when you want to get there, instead of waiting until, it's time, I have to move, or, I have to get in my dream home because I only have 10 years left, or whatever that looks like. Let's get to that point right now, build to that point little by little, and then you will be much more comfortable on the back end of that. So I hope that helps. We'll talk to you soon.